Apple unveiled the iPhone 13, new Apple Watch and iPad on Tuesday, September 14th. But the stock fell 1% to close at $148.12 on Apple event day. Should investors be worried? Early this year, some analysts estimated Apple stocks could reach the $200 mark before 2022. Before the launch of iPhone 13, the stock rose 27% from the May low at $122.77 to $156.69, but it fell almost 5% from its all-time high, after a California federal judge ruled against Apple in a dispute over App Store payments. I briefly covered Apple's stock in my previous video, how TSMC price hike impacts stocks like Apple, Tesla, AMD and Nvidia. If you haven't watched the video, you can watch it by clicking on the link at the right corner above. The California streaming event, Apple's fans and investors may have already predicted the upgrades were faster performance, longer-lasting battery life, better screen and new colors. However, I am personally quite surprised that the new iPhone 13 prices are mostly in line with last year's model despite the TSMC chip prices set to rise. Such a strategy is not a norm for Apple, but this move will keep the iPhone 13 demand high, as Apple continues to offer iPhones at a wide range of price points, which are able to capture a wide level of market shares. It was reported by the South China Morning Post that the initial iPhone 13 pre-orders through Apple's store on JD.com reached more than 2 million as of Thursday, September 16th. Well, Apple stocks usually fall on the day new iPhones are unveiled. I personally believe the long-term outlook, with its new products regularly appearing on the horizon and sales growing steadily, Apple is still good. In the next few years, the iPhone business has less to do with specs and pricing. The pool of old devices would be the key of the business. The more the pool of old iPhones in the market, the higher possibility Apple's sales will increase. It was estimated that there are approximately 420 million iPhones in the market that are 3 years or older. This could drive iPhone sales to grow 5% or more, as the size of the existing iPhone population is huge. The iPhone 13 is concentrated on the Apple Cinematic Mode feature. This is brilliant, and it is right for Apple to sell this feature for its iPhone 13 as pandemic forces people to stay at home. A better camera is perfect for video calls, also good for people who need a device to make YouTube, TikTok, and commercial videos. The new iPads also upgraded with a wide lens camera to make them better for video calls and online classes. This could further drive the demand for iPad sales. The Apple Watch Series 7 with fitness included in Apple's One subscription could further drive Apple's subscription revenue as home exercises become a norm as COVID-19 and Delta variant threaten social activities. Apple generated 20% of its revenue from its services last year, and it recently surpassed 600 million paid subscribers across the entire ecosystem, which includes the App Store, Apple Music, Apple TV+, Apple Arcade, Apple Pay, and other services. I believe that Apple will continue to leverage the strength of its hardware business and closed ecosystem to lock in its users. The September 14th event only covered the new iPhone 13 lineup, the Apple Watch Series 7 and 2 iPad refreshes. I believe that, like last year, the possibility of Apple hosting multiple launch events is highly likely. On September 10th, the U.S. District Court Judge Yvonne Gonzalez-Rogers ruled that Apple restricts and prevents app developers from steering customers to payment options beyond Apple Pay is anti-competitive. Judge Gonzalez-Rogers issued an injunction restricting the practice and mentioned that Apple can't prevent app developers from communicating directly with customers through contact information they provided at sign-up. This ruling was devastating to Apple stocks, as on the day of ruling Apple shed $82 billion in market cap. As investors were worried about the impact on Apple's revenue, because Apple was no longer able to stop app developers from route players to alternative platforms to make payments and avoid Apple's 30% App Store fees. This has the potential to eat into Apple's services revenue. However, some analysts are still optimistic about Apple's future as they expect that at most the impact could be a 2% overall revenue and 4% to Apple's earnings. It is expected that the App Store growth rate will slow down in the first year of change, but it does not change the big picture of where Apple is going over the next 5 years. Analysts argue that the majority of App Store consumers will continue to use the App Store for in-app purchases, due to its convenience compared to third-party app payment options, in which customers will need to re-enter credit card payment details with more steps to complete the transaction. The ruling specifically stated that Apple did not have a monopoly in the market for mobile games, hence Apple has not completely lost the lawsuit. Apple's App Store isn't just the Epic case. In April 2019, the European Commission also launched an investigation into the App Store following the complaints received from Spotify. The EC charged Apple with violating competition laws but has not decided how it's going to move forward. Such a lawsuit could take years. In the US, the Justice Department is also reportedly investigating Apple's policies. The US regulatory could introduce bills that would impact how the App Store operates. As of now, it is still not clear if Apple would appeal the ruling in the Epic case. It is also unclear what Apple's next step would be if it decides to implement the judge's order. Hence, Apple's next move would be crucial for its stock movement. The next catalyst for Apple will be its augmented reality business. It was reported that Apple is developing an AR headset and the launch date could be as early as next year. However, this rumor has not been confirmed by Apple. Based on the patent filing revealed by Apple, there is a possibility that Apple could use thermal touch technology in its Apple glasses. With the technology, Apple glasses could turn virtually any flat surface into a touch screen. The COVID-19 pandemic has forced many physical businesses to shut down and keep most people at home. Home shopping using AR tools has become a major part of Apple's focus right now. Google and Microsoft are pursuing 3D shopping on Android phones at home by using phone-based AR tools. Users can see things that they would like to buy in 3D from their phones at home. The global market for AR products will surge 80% to $165 billion by 2024. Microsoft and Facebook have started developing products for virtual and augmented reality markets. Microsoft's HoloLens was released in 2016, followed by HoloLens 2 in November 2019, but so far it has not gained market traction as the product is too expensive for the retail market. Recently it was reported that Facebook is planning to expand its Oculus VR business into the AR market with lightweight glasses between 2023 and 2025. Apple has the world's largest AR platform, with thousands of AR apps on the App Store. Apple hardware and software are designed from the ground up for AR, hence Apple glasses will be the future product for Apple. If Apple could successfully launch its AR glasses, it would complement its iPhone, Apple Watch, AirPods, and other devices to lock users into its ever-expanding ecosystem. Other than the Apple AR business, Apple's car project will be the next big thing to watch. In 2014, Apple began working on Project Titan. Apple had employed 1,000 car experts and engineers to develop an electric vehicle at a location close to the company's Cupertino headquarters. The project didn't go well, and in 2016, it was reported that Apple almost terminated the plan and hundreds of employees were laid off. Subsequently, the Project Titan team managed a breakthrough and overcame development problems. In December 2020, it was confirmed that Apple is working to launch a self-driving car, and the release date will be in 3 to 6 years' time. It was reported that Apple was in talks to form a partnership with an established automaker such as BMW Group, Hyundai Motor Group, Nissan and Toyota, but no final decision was reported. Apple is also developing next-level battery technology to extend range and efficiency. However, in early September 2021, Apple lost its car project head, Doug Field, to Ford. The position was replaced by Kevin Lynch, an Adobe veteran who joined Apple in 2013 to work on software for smartwatches and wearable health devices. The loss of the car project head could potentially delay Apple's self-driving car launch date. Hence, the rumor of Apple car release date in 2024 may be a little too optimistic given the internal management issue, the global chip shortage, and the ongoing global health crisis. However, it is not the best time to add more Apple stocks now, as the price tag is close to $150 with PE close to 30 times. Based on Apple stock history, Apple stock will pull back before it breakouts and runs again. I will wait for another dip before I start adding more Apple stock. This is not financial advice. I will stop here for today. Hope you enjoy the video, and thanks for watching through the end. Those who liked this video and who also liked my previous videos, thank you so much, folks. Those who already subscribed to the channel, thank you very much for your support. Those who prefer not to like any video nor subscribe to any channel, thanks for clicking. I am Max from Market Pulse Studio. Have a nice day and thank you.